Hello, everybody. This is Nikhil from News Bytes, and thank you for joining us today. Welcome to the F50 Global Capital Summit India track. So, before starting this session, I would like to take this opportunity to introduce the F50 Global Capital Summit and News Bytes. The F50 Global Capital. Everybody. This is Nikhil from News Bytes, and thank you for joining. The F50 Global Capital Summit is Silicon Valley's largest international investor conference, and the attendees here are from all walks of life, from corporate executives, industry leaders, startup founders, and investors. And they'll be taking part in roundtable conferences, fireside chats, speaker sessions, panel discussions, and startup showcase. And the India track is being managed by Newsbytes as the media partner. Now, a bit about Newsbytes. Started back in 2015, Newsbytes is now one of India's largest and fastest growing digital media platform. And uh, we cover news across categories uh, from politics, India, sports, science, tech, business, lifestyle, to name a few. And through our articles, we try to answer the first 5 questions that come to the user's mind on reading a news headline. Newsbyte is also AI-driven media portal where we have our own AI engine called Yantra, and Yantra has ability to create factual content without uh, almost with zero human intervention. And all the articles which we see on Newsbytes website, that is newsbytesapp.com, most of them are created by Yantra. So this was it. And now I would like Pawan to take it over from here, and we'll start with the roundtable conference. And the topic is for this roundtable is investment in the COVID times. Pawan, over to you. Thank you.
Okay. Thank you, Nikhil. Appreciate your introduction. Let me start on behalf of Managing Committee of Global Capital Summit, Spring 2020. I welcome all of you, and I also want to thank Newsbytes for bringing India Track. We'll talk about it in a while. So GCS is into the 5th year. Earlier, we used to be an offsite event localized to Bay Area. COVID has changed everybody's approach to business as well as the way we operate and the way we live. So GCS2 has gone online. And when we went online, we also went global. So that is where we introduced the India track for the first time. And we are doing this whole track in partnership with Newsbytes, which is the leading media house, at least the online media company in India. I also want to thank the second startup from India, Floatin, which is also streaming this entire event globally on their music app. So it's a great story to see two big Indian startups joining GCS and in truly taking this global. In terms of the event today, we will start off with brief introductions of the the participants in the panel. So let me start off with myself. I'm Pawan Kumar. I'm an ex-founder. I did a couple of startups in the past. I'm partner at F50 Elevate, which is an accelerator under F50 Group. And I'm also co-founder of 3PM Ventures. So I do investing and also I mentor startups. So let's move on to the other members of the panel for their introduction. So let's start with Keith.
So I'm Keith Tier. I'm British by birth, but I live in Palo Alto in California now. You could say I'm a dinosaur because I lived a long time, but I'm not extinct yet, but I definitely have lived for a long time. I did in the 1980s, I led networking and database, multi-user database companies in the UK. In the 90s, I started EasyNet, which was the first European service provider for consumers in 1994, and the first cyber cafe in the world called Siberia, also in 1994, before there were internet cafes. I moved to the States in 97 after EasyNet did an IPO and did a company called Real Names, and Real Names let it made it possible for you to type Hindi in a browser and go to a web page. Our partner in India was Net for India, and we basically had namespaces in every script in the world, enabling that script, like Chinese, simplified Chinese, or traditional Chinese, or Hangul in Korea, or katakana and hiragana, or Cyrillic, Hebrew, Arabic, to be a web address. And that was a very big company. By 99, Real Names was filed for an IPO, and EasyNet was public. And then the world crashed and burned, not dissimilar to now. And we went through the bubble bursting. And my wife still reminds me of all the money I could have made if I made different decisions. I went on to help Michael Arrington create TechCrunch, which some of you may read. I was the first investor and his business partner. And now I mainly invest. ADV is a UK fund, and I run my own portfolio here in Silicon Valley through an entity called Archimedes Studio. I'm the advisor board chair of F50 as well.
Thanks, Keith. Sean?
Hello, I'm Sean Randolph. I run an economic think tank here in San Francisco. We're part of the Bay Area Council, which is the major business organization in Northern California, about 75 years old, about 350 companies as members. Most of the major technology and other companies in Silicon Valley and the Bay Area are members, but a lot of smaller companies as well. And our basic role is to, as a think tank, look ahead at the economy, maybe 3 to 5 years, if we can, to understand what's driving it, where is it going and why, what should we be worrying about, what should we be investing in. So Silicon Valley is very much a part of our geographic territory, but because the global footprint is so large in the Valley, such a high degree of economic integration with other partners, including India, I spend a lot of my time looking at how Silicon Valley connects with different parts of the world, especially around startups, technology, R&D, and innovation. So India has been very much a part of our focus, as have other major parts of the world, China, Europe, and elsewhere. And when we look at what's happening now around COVID-19, that's just part of the picture about what is influencing the flows of investment, entrepreneurial activity, and technology. So it's great to be with you today to talk about what's happening in the Valley and also in India.
Thanks, Sean. In India?
Hello, everyone. Good morning. I'm in India. Saha, I live in Barcelona, Spain. Right now, it's 5:30 in the morning here. And so I started my own fund before. I'm an engineer, like a lot of Indians are. And I started my fund in 2014. And right now we invest mostly between San Francisco and Silicon Valley and Europe. As for India, on a personal note, there are right now 2 of my portfolio companies through me are going live in India. So both of them, one in signature services, and the other one in the fintech area. So I am Indian by birth, and I'm still Indian by passport. I want to keep it that way. And so one of the reasons to start linking European and Indian businesses is also on my from my emotional side. Well, lovely to be here. Thank you.
Thanks, Anindya. Let's go on. Amit?
Yeah, thanks, Pawan. So I am Amit Sundar. I am co-founder of Startup Buddy. By education, I am a chartered accountant. So in Startup Buddy, we help startups to set up their entity in India, and apart from it, we keep helping them in legal and compliance. We do lots of due diligence for the VC fund, and this is about Startup Buddy. And recently, I have set up my own fund, which is named as Fluid Venture. More details about the thesis of Fluid is available on fluidvc.in.
Okay. Thanks, Amit. Sumit?
Thanks, Pawan. Hi, everyone. So this is Sumit Goswami here. I'm based out of Delhi. So I'm currently working as the managing director for Novistra Capital. We are a merger and acquisition and private equity funding advisory firm headquartered out of New York. We primarily do cross-border transactions across US, UK, and India, and help companies in the health tech, business process management, media and entertainment, and technology space to raise funds or help them with their growth strategy, inorganic growth strategy. Prior to Novistra, I co-founded a startup based out of Glasgow and then Hyderabad, and made an exit in about 4.5 years' time. Then did a role with a private equity firm called Ally Global, where the mandate was to do healthcare technology investments in the US market. During my stint with the PE firm, managed to talk to a lot of exciting and very, very interesting healthcare technology companies in the US, and was really amazed to see the kind of work that goes on over there. I'm just trying to see if the same thing can be replicated here in the Indian market, and I've been talking to a lot of healthcare tech companies here in India as well. I've also done a couple of investments as an angel, and hoping that few of them will, successfully manage to go in for second round of funding. So yeah, looking forward to the session today.
Okay, thanks. Ratnakar?
I think good morning to all the people in India, and good evening and good night to people who are there in US, and welcome all. When it comes to Hyderabad Angels, it has been started in 2012 with an objective of investing in startups. But investing in startup is not only putting money. We wanted to do value add beyond putting money. That's what our objective always has been. So most of our investments are in technology side, and in last 8 years we did an investment in 37 odd startups, and we got 4 exits. Another 27 companies are doing well, and out of which 12 to 13 are doing very strong. And currently, because of COVID-19, we were looking at certain specific sectors, but investors are very much interested to look forward for more and more investments. Coming back to my personal thing, I'm a chartered accountant, and we worked with retail. Then I worked with ICICI Bank in the debt funding side, and I worked for a mid-sized IT company called Prolifix, where I had their finance division, raised PE fund, and did 7 acquisitions there. This is my personal update about all of you. Thank you.
Okay. Thanks, Ratnakar. So, just to move on with the topic of the day, I think it is always good to begin with Keith. His thoughts are very disruptive and completely different, and maybe it sets the trend for the whole discussion. So, Keith, you spend time between 2 different geographies, UK, USA, and also you're connected with 2 large ecosystems. So, what is changing, or what has changed due to COVID, or what is going to change post-COVID? Keith?
Sorry, I was muted.
Okay.
I think what Pawan was saying is that I'm crazy. But I'll tell you what I think. I think that COVID is going to make permanent some things which we thought would be temporary. And I say that at the emotional level. I've spent now, after 3 years of being on airplanes between London and San Francisco, I've now spent 6 months, more or less 6 months, only here in Palo Alto. I have had all my meetings on Zoom or other similar products. My kids have been home. I have 3 teenage boys, and I've been at least half the time their teacher, with my wife the other half the time. I'm cooking things I never would have cooked before, and I'm now a better cook than my wife. I hope she cannot hear me, but I've grown grass, a lawn, not marijuana. I've grown a lawn outside outside here, which was previously patchwork, and I am loving life. My wife has discovered TikTok. TikTok is this, if you don't use it, It's this Chinese origin app which is full of individuals entertaining each other, peer-to-peer comedy, basically. And she doesn't watch TV anymore. She's rather watching TikTok. I've got solar panel on my roof from Tesla, so I'm not paying electricity. And it feels to me as if human existence has just shifted from work to something that feels really human, despite the fact that it's driven by a terrible virus that is killing people. And I suspect that we should be investing in the companies which have grasped this present and intend to make it permanent. Food delivery at home is, was already there, but now it's everything. So I think COVID is an opportunity to reinvent. I'll stop on this. My personal obsession is with how people without jobs can buy food. And I've focused in on universal basic income and blockchain and digital currency, along with rewards programs to allow people to go to supermarkets and spend these digital currencies. And it feels like there's a whole new distributed platform for money, which will be more global. Libra at Facebook is a kind of a signpost, but it isn't the right product. And I'm very obsessed with that as well.
Thanks, Keith. Let's move on to Anindia. Anindia is based in Spain, and Spain is the place which has seen one of the worst impact of COVID. Happy to know like they have come back out of it. But still, just understand like what is the investor perspective? How does investors see in Europe? How does it impact your portfolio? Where is your focus? What's happening at your end, Anindia?
Thank you. Well, Keith, I live in Barcelona, Spain. So I wouldn't say the good part about living in any Mediterranean region is probably it's you don't have to be a millionaire to have the best quality of life. So I was born and brought up in Calcutta. I still remember Barcelona as of today. It's probably a bit cleaner version of what I used to see in my childhood. Small houses, going to the markets, so the work-life balance is something I think in Europe most of the countries know very well. But so COVID hasn't changed that. It just has pushed people. I mean, they don't get out of their homes, so it has affected very badly both Spain and Italy, and now sadly in the UK. So UK is heavily affected. So what has in terms of investments, I think funds that have already raised money, they have a lot of money to invest, and we all know that people who know a bit about funds, they have an investment mandate to invest in the coming years. So these funds will keep investing. So I'm not so sure about the new upcoming funds. So that would depend a lot on the stock markets, because if they're down, the investors won't have money to invest in alternate investments. What I have seen, curiously, is there's a huge shift from what I call business model kind of startups, which have been massively hit, to pure technology based startups. So I have right now 2 startups in my portfolio, which is travel oriented. One of them is the online version. It's online version of Thomas Cook, right? So they're also in the States. They're in 7 countries now. So they're basically sitting idle. So the rest, including Maya Data in Bay Area, which works on Kubernetes and the cloud network, they've actually grown. So I have at least 7 companies in my portfolio which are growing heavily thanks to this crisis, because suddenly most of the companies, they have realized, okay, so everything is not offline. So we really have to bank heavily, shift heavily and very quickly to infrastructure that is online, which is great because certain things are, I mean, I have, like Keith said, I have become way more productive because I don't have to travel as much. So mainly I would have traveled to Madrid, Bilbao. So all these, I mean, even if you travel, you take at least, if you have 3-4 meetings lined up, you take at least 2 to 3 days in every city, and that is taken out. So here you just focus on the calls, and I don't like writing emails because I think they're ineffective. So you need an introduction, you need a conclusion, and then the body. So I wish just the body of the email could make up for it, right? So what has happened during COVID times is precisely that. So you connect via video call, and you focus on what needs to be getting done, instead of in the typical in Mediterranean that we say that going for long lunches and long dinners, and which is also good and lovely to be maybe someday going back to that. What the major thing what has happened is, apart from move to technology, is a shift between the mindset of, at least in Spain, I see clearly a mindset of what I really need, and in some cases, what is indispensable, instead of what I deserve. So, what all the startups that deal with, well, I might want this, and it will be lovely because I deserve it. So, in the West, I see we have in India also, it's in a very long, wide range of the deservedness, rather feeling of deservedness. I deserve this and I want this. So that is shifting. People are focusing more, let's say, on toilet paper, jokes apart, but people are focusing more on the really need things that they need, rather than the wishful thinking, no? And which is good, because from our side, I think startups that are focusing on specific market needs and demands, like it mentioned, no, how to real needs from the real human issues, so how real business issues, how do you find jobs for people who are jobless, right? So, and that too online. And so from our side, there will be a focus on technologies that are really catering to some specific need in the market, no? And rather than anything that is what I call fluff. Uh, so during crisis times, people are not worried about what they deserve. They're more worried about what they really need. So that focus will be there to stay. And my wife works in the hospital, so one day, and we have 8 p.m. walks. Used to have when it was under lockdown. So 8 p.m. was the time when you can walk outside. So I asked him, so how long do you think this thing will continue? She said, well, I don't know, but in the hospital they say at least 3 years. So if even, I mean, if she's talking about, she's very far from business. So if she's talking about 3 years, just in terms of coming and going of the outbreaks, so imagine the long drawn impact on the economy. So we really need a change in mindset, and people who have not changed in mindset, they need to work really fast in time to get in line.
Okay, thanks, Anindya.
Thank you.
All right, thanks. Sean, I mean, you are connected with the largest ecosystem, startup ecosystem, and you spoke earlier as well. You know, the most of the VC funding originates from there. And, I think with the home shelter and a lot of other stuff happening during COVID times, I'm sure there are some shifts in terms of their approach, the way they look at it. VCs always used to have face-to-face meetings. You keep reading, like, they don't see it as a barrier anymore. Models are changing. So Shane, what are your thoughts? Like, where are we heading, and what do you see is the near-term future?
Sure. A couple of thoughts. I do miss seeing people in person. I love Zoom. It really works well, but someday we got to get together and, have a beer together or something. But I think that I've really been struck by how much the technology that we're all depending on today is actually being generated from Silicon Valley. If you figure now we're talking on Zoom or we're talking on LinkedIn or on Google platforms or on Facebook, like a really large part of the world, leaving aside China, is connecting on these platforms that are in Silicon Valley, where we're having food delivered by Uber Eats, things are being delivered by Postmates. A lot of us are sitting at home watching Netflix. And it just struck me the other day that almost all those companies are located within 20 to 30 miles of San Francisco International Airport. So it just emphasized in my mind just the growing and critical nature of technology to how we go forward. Because what we do in the future is going to be built on those platforms or new platforms that emerge out of the crisis. And I think it's accelerating a lot of things. And I'm really thinking along the same lines, I think, as Keith here. Trends that were already there, they might have happened sooner or later, but they're happening a lot faster now. So I think IoT is going to accelerate the whole automation process, even how you can distance people working in production facilities from each other, accelerating automation. It was there, it's going to go a lot faster now. Remote learning. So all of the teaching going on at universities in the Bay Area and across the states for the last several months has been remote. And now every university, there's no one model. They're all figuring it out in their own way, is debating how much to return to the campus. Do you return entirely in the fall to the campus? Some universities will stay 100% online, at least for the next year. Others will have a hybrid thing, but inevitably, more of the instruction than in the past is going to be online, and that trend is likely to continue. And then things like remote medicine, University of California, San Francisco, Kaiser Health System, all the big medical facilities have been, not surgical treatments, of course, but they've been providing medical consultations 100% online for the last several months. And they told me they're not going back. There will, of course, be online or personal consultations, but they plan to continue, if not all, as much of their future consultations with clients remotely. And they're saying that it's working. So those things were happening, but now so much faster. So I think what we're seeing is really this huge acceleration of things that were already in the works. And we've been forced to figure out, do they really work or not? And most of them actually work pretty well. But I think one of the other things we'll see is biotech was doing pretty well in terms of investment. Now I think biotech's going to get a lot of it. There's so much more that's wrapped around life science that I think COVID is stimulating. So the interest in the capital investment community in life science, and then also I think in deep technology. We spent a lot of time for years and years investing in apps and social media, and it's paid off in a lot of ways. But I am sensing more of an interest now in looking again at deep technology, but not all of them are going to make it. A lot of them don't have enough runway with the existing funding. They got to figure it out. But there's a lot of capital out there to be invested still. It may be a little harder to raise new funds, and I think a lot of the venture firms are keeping some of their powder dry to decide what to do. They're not going to throw it at the wall. But I think that to be sort of positive in a difficult environment, a lot of really successful global companies came out of the dot-com bust. They came out of the Great Recession of 2007 to 2009. I think entrepreneurs by their nature are entrepreneurial. They'll see the opportunities and pivot in that direction. And I think that what venture investors are going to be looking for. And I think we'll see really, as we've seen the tech companies focusing on dealing with the post-COVID or a COVID situation, I think we'll see life science and integrated with IT moving that direction as well. And so a lot of companies will continue to get investment, even as others drop off. And I think there'll be a lot of innovation coming out of this at the end.
Thanks, Sean. So from a global perspective, let's move to Indian scene. I think there cannot be anyone better than Amit to talk about how things are shifting and what is happening in Indian ecosystem. So Amit, over to you. Can you share some thoughts?
Yeah, sure. So Pawan, to give you statistics, I am an angel investor in 25 plus companies, and you will not believe that companies in future of work, which is including technology and are doing pretty well, means exceptionally well, because the technology which they will have to deploy to B2B clients, that is in expedite, and they are doing work a lot, means in fact in 3 shifts, whatever is the technology company. But the good part is that one of my company which is into personal hygiene, they did extremely well, means the sale of last 2 months is equivalent to last 10 months sale. You will not believe that, because suddenly the shift has changed towards personal hygiene, and the people who were not taking it seriously, the clients, now they have taken personal hygiene as a key thing now. And one of my startup pitched yesterday as well in life science, so they are doing pretty well. They are aligning themselves with the government and working on COVID day in day and night, and they are doing pretty well now. And so what I want to say, that in startup ecosystem, this is for sure that some of the startups will fail and some of the startup will succeed, and the success ratio is lesser than failure. So as a startup are taking it just like another struggle. COVID-19 is another struggle for them, just like another lots of struggle they keep facing on routine basis. So uh, considering investment, all the investors are still looking in India for a right opportunity. Still, there is little wait and watch, because no one knows that where is the peak of COVID-19 cases. So still they are holding certain term sheet, but most of the investors in my community have identified right startup, and they are working with them on term sheet, and they are ready to invest. So every day they are evaluating it. They are uh, uh, negotiating on the terms or the valuation part, but there is positive, means there is neutral impact on investment as per my understanding. Definitely valuation will be little go slow for some of the period, because the period of a startup will increase, and investment will take a little bit shift. Like some of my portfolio companies in food and beverages, they are struggling a lot, and the struggle may be little longer. So wherever there will be operational heavy businesses, or the manufacturing will be involved, that will take a little hit. But apart from it, IT, technology, future of work, personal hygiene, wellness, anything which is improving immunity, uh, or health tech, they will take a very positive impact in near future. We will see that.
Okay. Thanks, Amit. So let's move to mergers and acquisitions, right? Sumit is the right guy to talk about it. Sumit, in this changed environment, are we going to see a lot of M&A? Are PE funds, generally all PEs are sitting with good cash to look for the right opportunities. So are you seeing a intense activity or accelerated activity, M&A and PE?
Sure, Pawan. A lot of private equity funds have actually got enough dry powder with them, and their investments has not slowed down. Investments are happening, and we are as busy as we were 3 or 4 months earlier. A lot of transactions are going on. It's only that the pattern has changed. The sectors where the Ps were investing, that has moved. That has moved to things which are needed now, which is health tech, which is a very, very critical element of what everybody is doing. After the COVID-19 impact that the industry has seen. Then a lot of Ps are also focusing on edtech, education companies. A lot of good companies are coming up in the space, and the Ps are very, very interested to look at them, and there are discussions going on. And then, of course, e-commerce. E-commerce has always been a big thing in India, right? So, and the interest is still there. People are still looking at the e-commerce companies, and of course, a lot of large players like Swiggy, Zomato, and others, they changed their model and made it more COVID friendly, so that they can cater to the requirements and the demand of the market. And this kind of companies have not seen any kind of downfall in their revenues. They've in fact seen a growth for the last few months. Merger and acquisitions, a lot of interest for almost all the sectors. Of course, media and events have taken a beating. There the activities have stalled, but sectors like tech, business process management, healthcare technology, we are seeing a lot of interest. And in fact, we are more busy than what we were about 3-4 months back. In terms of angel investment, where I'm personally involved in a few of my portfolio companies in the edtech space and in the social networking space for gig workers, that's doing extremely well. In fact, both my startups have seen a major jump in revenues, which is very encouraging. Especially the one in the edtech space. So they basically provide a technology solution for people who are blind, and they've done extremely well. They've grown their revenues, and it's very encouraging to see that. And I'm sure that must be the trend across all the edtech companies. I mean, look at the market scenario today, right? Schools all of a sudden, which were delivering classes offline, had to move to an online mode, and none of them were prepared. Even the larger schools, well-known names with multi-location branches and all of that, they did not know how to cope up with this. And the startups which took advantage of this opportunity have been actually making money, and schools, the colleges, the universities are implementing such edtech solutions, right? So there's a huge demand for this in the market. Similarly, health tech. The Indian healthcare ecosystem is still not regulated, and there has not been major innovation in the healthcare ecosystem in India as we have seen in the US market. I've seen a lot of work been done by AI companies in the area of population health management, right, and drug discovery and all of that. But we don't see that being done in such a massive scale in India yet. And of course, over the last 2 or 3 months, when people approach me for investments, I've seen a lot of such companies coming up actually, and very interesting to see them trying to work in this particular space. And there are institutes like the IITs, almost all the leading IITs. There are incubators in the country. They are helping the startups to really grow up. There are societies like BIRAC, which focuses on biotechnology. They are really encouraging such startups to come up and come up with innovative solutions. So yeah, there has been a change overall across the ecosystem, be it M&A, private equity, or venture capital funding or angel investing. There has been a dramatic shift. Fintech is not going to be the the theme anymore, and it's going to be, I think, more of e-commerce, more of edtech, more of deep tech, AI, cloud, and those are the kind of things where people will be looking at very with a lot of interest to invest.
Okay. Thanks, Sumit. So let's move on to Ratnagar. Ratnagar, you're connected with one of the most active angel groups in India, right? So are you guys focused on rescuing the portfolio, or are you guys actively looking to fund? So where is the effort now? Ratnagar?
Yeah, sorry. Yeah, you can hear me?
Yes, go ahead.
Thank you. Thank you all. I think when it comes to startup ecosystem and angel investment in India, I think we have seen the life cycle what really moved from 2012 to till date. And there is a shifting focus of investments looking into futuristic scenario, how things are going to change. Prior to COVID, this is prior to February actually, we are focusing on more of deep tech, uh, e-commerce space, and we're also looking for fintech companies and keep on investing on that side. But when the COVID got impacted and people were muted for some time, what really happening, the disruption point of view, what really happening on the ground. So we have reviewed internally, we waited for 15-20 days to understand what really happening on the ground and to understand what kind of startups will work. So for that, what we did is we reviewed into our portfolio because we have a widespread portfolio in various sectors and segments. So we looked into that, we understood who are going to do better, who are going to be neutral, who are going to get worst affected. So we classified our companies into 3 segments. One is So companies are new by doing the bridge rounds to make them take or pivot their business idea. And the startups which are really affecting a lot, for example, the startups in the space of uh, healthcare, tourism and travel, where we have 3-4 companies where we invested, they are having a trouble. I think what we felt is for next 12 to 14 months, they are not going to sustain this COVID-19 situation because they need to pivot their business scenario. So what we did is we sustainable and we are funding them right away to make them sustain. That is what has happened. And that doesn't mean for the month of April 2020 we were on mute, but from May onwards, our investors came back and said, Ratnagar, now why don't we look on the new focus areas which is coming into market? So we started looking into deep tech, health tech, ed tech, where we've seen some unique opportunities coming in place. Second thing, what really happened is previously for angel investors, we used to invest in companies at very early stage, maybe at the seed stage or below pre-series A. Now, for as an agent investors, we got an opportunity looking for bridge round, which are really doing good, and even the companies which have completed Series B are looking for a bridge round. And our people thought the price points, the valuations, and other things is coming at right juncture. Why don't we enter now? And they allowed us to enter in one or two startups. So we thought COVID has given a for angel networks to get into some of the large investments which we missed in the past, and we are grasping that and continuing our focus on health tech, deep tech, and ed tech continue to be there. In between, what happened when in the month of June we observed agri-tech has started picking up. I think agriculture in India, because of the government recent decisions, especially on the farm sector, has opened up a lot of good insights to agri-tech companies. We thought there is a good opportunity. We quickly went and tied up with some of the accelerators and incubators which are nurturing this agri-tech, and we are picking and choosing companies from this side. The second thing which I would like to bring is space tech, which last 2 years we were thinking whether to enter, not to enter, whether to enter, not to enter. The government of India has opened up even the ISRO to do the private launch of satellites, and they also would like to allow private this thing what Tesla is doing in US. I think there are few startups which are coming into this space, and we were keenly watching them and trying to get into this space. So the overall angel investors in my group, especially and outside our group also who are investing, they found there are certain interesting startups. It is an opportunity for us because valuations has taken a little bit beating for startups, and it has given an opportunity for angel investors to invest. We are looking into this space very keen in these areas, and constantly working on this space. So the philosophy of Hyderabad Angels per se, what we are doing, as I said initially, is the startups which we are investing, can we do required value add either by advisory, bringing in business connects, or getting the right team for them. For example, getting a CEO, CFO. So we do interviews, we bring right people and see them, they are growing well. And we are also well connected with a large VC network. I think they are also helping us to understand. And we would like to be their funnel, and some of them chosen either by the angels for them as a funnel to get into the investments. To conclude, I can say COVID has given an opportunity for angel investors to get into good startups. Our angels have been really excited to get into this space, but certain sectors where we see there is a little bit lag, taking longer time, we are not touching them because we felt good money shouldn't go for the bad cause because it will go for salary payments and other things. We want them to self-sustain. Has been the objective, and this is how we are working here.
Okay, thanks, Ratnakar. So coming back to you, Keith. Since COVID outbreak, right, everything moved online. The businesses moved online. The opportunities moved online. Now we are seeing a lot of innovations becoming visible from different parts of the world. So, I mean, again, this is one of your favorite topic. That's why I want to bring it up. Are we going to see new clusters emerging in terms of innovation? Are we going to move away from Silicon Valley? I mean, does it really matter where the company is located? Does it really matter from where innovation is coming?
Well, I personally have always thought it doesn't matter. My best investment is in a company in Berlin. To Ratnakar's point, it's an ag tech company called Infarm, INFARM.com, and they do vertical farming. What is vertical farming? It's growing food in buildings in the city using LED lights and hydroponic water circulation with nutrients, no soil, no fertilizers. And that company, I met them 5 years ago. They're doing a round now, which will be, when they complete the round, they'll have raised 250 million euros in 3 years. And, you know, I was living in Silicon Valley, met them in Japan, and then helped them build their business case. I went to Berlin about 3 times, but mostly digital like this. So I'm pretty immune to where a company is. I'm very, very focused on, you know, the canvas on which we all exist today is massive. We have 4 billion smartphone owners. We have citizens living in cities over 200,000, equaling billions of people. And so to deliver software, services, food, physical goods, suddenly distribution is your least problem. Especially if you're a software company. Your biggest problem is yourself, execution, and getting something done. So I'm feeling as if this is the era for decacorns, not unicorns. The biggest companies will be decacorns very quickly now, and then pretty soon after that, there'll be you know, 60 and 70 billion dollar companies, which are beginning to be commonplace anyway, will be normal. I read yesterday in Norway, a company which only serves Norway is now worth $2 billion because the penetration of smartphones is so widespread that even in a small country, with as long as you have millions of consumers, you can get to be worth billions of dollars quickly. So I believe that the size of startups is just going to get bigger and bigger. Consumer will still be a massive opportunity. B2B will be a big opportunity. Subscription services. I started a newsletter called, if you go to thatwastheweek.com, you'll see my newsletter. I've got 5,000 subscribers after about 2 months. I charge $90 a year. And I write about how to get funded as a startup, what the preconditions are, how to tell your story, how to build a model. And I target venture capitalists, angels, and startups. And that's me making money just for myself using the tools. So it just feels like it's the best time to be doing a startup ever, notwithstanding the virus. And I hate to sound positive when there's so much bad stuff going on. But I do think overall we're living through a positive era.
Right. Okay. Thanks, Keith. Sean, you know, just to get a perspective, how are businesses returning to work in the Bay Area, right? Because they're the ones who always lead with the new norm and how to realign with the new reality. You're on mute. Sean, you're on mute.
Thanks. I think the biggest change we're seeing is around physical space, where essentially everybody was required to vacate their offices and go home. And I think a lot of companies were concerned initially that they would lose a lot of productivity, but I've heard again and again from people I've talked to in the last month that they were actually very, very surprised productivity went up. And I think that was an eye-opener for a lot of companies that perhaps they didn't need the office space, the people being permanently at desks in the office. So this is running a little contrary to what I think a lot of the ethos was around how you bring startups together. You cram a lot into a space and you have the personal interaction. So I think there's a lot of things that need to be worked out. I'm not personally convinced that we're going to be all virtual all the time. I think there's a lot of intangible things that happen by virtue of people interacting in a less programmed, informal, sort of spontaneous way. And that's where innovation tends to come from in the end. So, sorry, I don't think we're going to be all online forever. But we did a survey last month of companies in the Bay Area, and 81% of the ones responding said they did not intend ever to bring their staff fully back to the office. They would have different arrangements. Maybe some would come back progressively over 5 or 6 months. Some might never come back, but almost all of them said that a much larger, if not the majority of their workforce would work from home. So that raises a lot of things like, what does physical space look like? What does commercial office space look like? What does public transit look like? Will people be using public transit? It was a huge issue for us in the Bay Area because we didn't have enough. Now it's empty. Well, there are enormous reorganizations that are happening around lifestyle and just the patterns of doing business that we can't foresee, except that we know for a fact that much more work will be remote from home, maybe some hybrid with office arrangements over time. We know that a lot of services are going to be remote. We know that how cities are designed in terms of what do you do with all this space? What if you don't have quite so many cars as you used to? So I think you can almost look at almost any sector and reimagine what it might look like. And a lot goes back to IT and telecommunications infrastructure. A lot will have to do with the manipulation of big data. But I think if we all reimagine what the world might look like, I think it'll look quite a bit different than it did just a year ago. And I think virtually every Silicon Valley company, whether it's large or small, is thinking about that very hard right now, and as are investors.
Right. Thanks, Sean. Just to add, in my own portfolio, I have seen a couple of companies almost shed during last 3 months, and we somehow managed to keep them alive, putting in some more funds and all. But some of the companies really spiked, right? I mean, they were not able to cope with the demand. And one or two companies even pivoted into edutech space. There was one women entrepreneur-driven company which quickly moved into edutech space and phenomenal growth in 2 months' time. So, I mean, just to summarize, I mean, opportunities always exist despite whatever is the situation, whatever are the challenges, right? I mean, it all takes is to identify the right opportunities and take the wise decisions, trying to hold on to earlier models or earlier ideas or earlier way of approach to the market. I think the agility defines how a startup or a founder can really survive. And all those who are agile have really capitalized on this situation. And those, who still wait the past normal to come back, I think might have some, very unpleasant surprises. So very quickly, we are coming to the end of the session. So we'll just do one round and advise to all the founders, entrepreneurs, and all those who are waiting on the sidelines even to start a company. So, we are all veterans. We came from this background. We have been associated with startups and these ecosystem as founders or even otherwise as investors. So let's do a quick round where we just give them the advice how to survive this and how to emerge out of this. So let's start with Anindya.
Thanks, Pawan. I'll go quickly. So life is my mother always says life is a cycle. No, whatever goes down comes up. Whatever goes up very fast comes down very fast. So I would say be positive, be really positive, which I am right now. Look for opportunities, and like Bruce Lee used to say, be water, my friend. So be water. That's it. I mean, not much more.
Okay, Amit.
Yeah, so from my side, I believe that this year is a little bit year of a survival because whatever you had like a runway for the funded startup, the runway will be reduced because the revenues are reducing. So save as much cash as possible and try to stretch the runway in case you are existing funded. And in case you have not started yet, so I personally feel that this is the right time to evaluate your idea and do necessary changes according to the COVID situation, make necessary changes and implement it. Means because you have not started, so nothing is there to lose. So this
Right.
is the best time to start.
Okay. Thanks, Amit. Sumit?
So I think my advice to the startups would be, conserve cash, learn to conserve cash, work on your cash flow. That's very, very critical. Startups who had done that have managed to survive, and they managed to have a decent runway. But the startups who were not focusing on conserving cash and they were just focusing on growth, finding it really difficult to survive now. So focus on cash flow. Focus on profit margins. That's very critical. VCs are also not looking at growth anymore. They're looking at companies with good profitability. That's the buzzword today, right?
Right.
It's not anymore, trying to chase astronomical growth, which is just looks good on paper. But they're looking at companies which are realistic and they are chasing real goals and we're trying to be profitable. So just chase profitability, conserve cash, and be innovative. Be ready to pivot.
Okay. Thanks. Ratnakar?
Yeah, I think one of the things people said is after 2008 financial crisis, there are good number of startups came with innovative ideas and they become unicorn sooner. And we personally believe, guys, please look out for opportunities which are available. And current COVID-19, I think it has given a lot of opportunities. Please watch out. I will continue what Sumit has told with regard to conserving cash, keep unit economics positive so that the VC intervention will be very easy after 12 months to 18 months when they are putting more funds into the company. So that's what I say. We personally believe there is an opportunity. It is a good level which people need to think and take it to the next level.
Okay. Thanks. Sean?
Thank you.
Thanks, Ratnakar.
Yeah, I'd say that to a high degree, geography is still going to matter. Even with all the new technology and things being more dispersed, I think places that concentrate technology and talent and capital like Silicon Valley are still going to be pivotal for companies that want to grow because a lot of the growth is going to be global. So it doesn't mean that it's all in Silicon Valley, but there's a lot to leverage and take advantage of in the Valley that hasn't really changed. But it's a global process. So whether you're in China, whether you're in India, whether you're in Europe, it doesn't matter where you are. You could be in Bangalore, but look to leverage these global resources and to get that capital, but to get in the global markets. And I think for the startups themselves, just succeeding and surviving, if you've been around long enough, I remember when there's a lot of money floating around and life was really good and fat during the dot-com boom days. And then there was a dot-com bust. And then it got sort of fat again. And then we had the global financial meltdown in 2007, 8, 9, and things got lean again. And then the last couple of years, they seem to be getting kind of fat again. So I think for the foreseeable future, it's going to be important for startups to stay lean, extend the pipeline or extend the runway, conserve the cash. But I think more and more it's going to be now about revenue and especially about execution. If you can stay focused and execute, I think that's going to be the key thing for the foreseeable future.
Okay. Thanks, Sean. Keith?
So when Sumit was speaking, I was remembering Jeffrey Boycott, who could stay in the crease for 2 days and only score 50 runs. And I was thinking, I don't really want to invest in Jeffrey Boycott,
Right.
even if he can survive.
Right.
I'd rather have somebody who hits 6s and 4s.
Right.
So what I do is I think entrepreneurs who are thinking about starting, my advice to them is start with the end game.
Right.
mind, think about the way the world should be, the way you want it to be, and figure out how to get there, and go and pitch an investor your end game. Not traction, not what you will do this week or even this year, but how will you change the world? And then secondly, how will you do it? And what will it cost? And if I believe you, I'll give you money. Because I really don't care about short-term traction. It's like everyone who's ever watched a test match knows you don't know who's going to win the game on day one. You just don't. It changes so fast. You only can figure out who's going to win the test match based on who's got the best team and is the most consistent, has the best plan, the best coach, with and a big picture of the game. And that's who I want to invest in. So if Summit turns you, no, you're not for me, you're spending all your money, come and see me.
Okay. Thanks, Keith. Thanks. I mean, I want to thank everyone on the panel, Keith, Sean, Sumit, Amit, Anindya, Ratnakar. It has been a great discussion, very insightful. I mean, especially, it's very relevant in the times what we are going through. And the most important thing is, we got the US, Europe, India. I think these are the three great geographies which are working on innovation and bringing so many things together. Thank you very much, and great to have all of you sharing your thoughts and helping the founders, the startups, and also the entrepreneurs. And those guys standing on the sidelines went to jump in. I mean, they got a lot of insights now to make a call. Thank you so much. Nikhil, you're there?
Thank you, Pawan.
Yeah, thanks. Nikhil?
Thanks,
Thank
Pawan.
you.
Yeah, thanks. Thank you.
Bye.
Summit, I was only joking. I just wanted to use the cricket analogy. I couldn't.
No, absolutely.
Keith spoken like a true Englishman, but Boycott had a great sense of humor.
I'm a Yorkshireman as well.
Ah.
Wow. Okay, Nikhil, you want to conclude? Say something?
Yeah.
Go ahead, Nikhil.
So thank you for such an insightful discussion, and I'm sure that it will help to the startup founders, investors, and the people who are going to start up now in the times of COVID. And after this, we have a lot of fireside chats, panel discussions, and startup showcase lined up throughout the day. So stay tuned for the F50 Global Capital Summit India track. And thanks again for joining us.
Thank you.
Thank you.
Thanks, Nikhil. Thanks, see you all.
Thank you. Thank you. Thank you.
Bye-bye.
Thank you.